Hello and welcome to Stocks Advisor channel. Here at our channel, we're looking for interesting buy opportunities for US-based stocks. Today we will talk about Uber Technologies Incorporated, ticker name Uber, traded at New York Stock Exchange. Well, of course, Uber is a very famous company. It does not need any extra, let's say, advertisement in talking about the company itself. So we can straightly go to the situation on the market. And of course, we see from the mid of April, the decline was taking place from the level of around 60 and went all the way almost to 40 1 week ago. And now the question is, what's next? Are we going to decline further, or are we going to actually improve the situation and recover? Well, first of all, to understand this and actually what's happening in general, we need to look at the pattern and to understand the pattern. So, looking at the bigger scale, we see here there are several very important trend lines that can be observed, and one of those, of course, is this descending channel that we can see here. It started from, it was formed actually kind of from mid of December of previous year, and we see it's really persistent, and we can call this line actually R1. So this R1 line is a descending level, and it's kind of a bouncing level. So you see every time the price hits it, and it makes these big waves, of course with some inner volatilities as well. And now you can see we again the rebounds from it. So it confirmed, and again inner volatilities looks like to be starting. So it means that we might make another wave going a bit higher, and this would mean actually that if this continues, we might reach to the levels somewhere around 47, let's say, from the current ones. And this would mean being able to make a profit up to 10%. And this would be our profit-taking note here. Of course, usually we give a higher one, but it is what it is. So profit-taking would be up to 10% here. Once you can make it, really take it. Don't hesitate, re-enter if needed, but really do it in time. If you don't do it in time, the position might expire and you won't be in time to make a profit. Actually, it might be even more if you are let's say mid-term, but in general, this is the situation. So we don't see any major sign for recovery in general. So it might be continuing R1 line. Of possible positive indications here, it also might be, because today's candle, it's not really a piercer, but it's kind of a red hammer, so it might be forming kind of supportive level here. We still don't know if it will be. If it will be formed, we might actually go to recovery, and then the level to grow would be at least to 60, where the first major fight will take place, defining the further future. Are we going to go even higher or not? So we need to take into account both possibilities trading here. So the one possibility is indeed that we continue actually going down with a following R1 line, and second one is that indeed there is kind of a setup taking place that we recover. So therefore, how to trade here? Indeed, if it's going to, in both cases, recover, or actually if it will be the line to go higher, let's say the supportive line, this would be the first level to buy through, because both would be quite nice, and this would be 41.25 till 43.60. From here, we can wait up to at least 10% profit-making opportunity, and it will be a very nice setup. If we're going about actually to make a longer positive wave, or really the recovery and breakout upfront. So in both cases, this is the situation. Most probable again would be the pattern that we continue R1 trend, so it will be going further down, and this would define our secondary level. If it will be sudden break, for example, then it would mean that R1 line should be broken, and we need to seek for buying opportunities at the lower levels, and these would be then these levels, because this is the volatility range that was formed by June-August action of previous year as a top, and by around October, as a bottom, and around October as a top of this line, of this level. So this would be the level of 34.33 to 36.64. And this would be a secondary technical level, so it's expected one. We have usually two technical levels, meaning that the technical levels are those levels that are expected, and the last one that we usually give at our channel, our videos actually, is the level that so-called risk mitigation. So it's not expected, but we just keep some funds to buy there if price declines due to some negative catalyst-based negative effect, which could be news or market sector-related situation. And of course, the most famous global situation or market-related situation that was taking place last year, it was a COVID, famous April price moves for all stocks that declined. So something for like that, we need to also keep some funds, and this means that we should keep some funds just to buy at this level between 28.30 and actually 30.14, because then this would be our risk mitigation level, the kind of a final stand, final support level. And because we buy through non-linearly, this means that even if price goes down, it's no problem. If you follow this approach, once the rebound takes place, you will be able to make your profit at least up to 10% or even higher in this case. So these are 3 levels to buy through. And now we need to talk how to buy through, because we buy non-linearly. We don't do stop loss. We just look at the daily candles. And with this being said, it's still a classical situation, so no extra risks are seen here. Therefore, it will be 5-portion play, meaning that the money you would like to play here, you can split in 5 portions. Then you can buy with 1 portion the first level. If the price declines to the second level, you can buy with 2 portions. And remaining 2 portions you can keep to buy through the third level if we have any negative catalyst-based decline taking place in the near future. So with this way, you will be secured for most major risks, and at the end of the game, it should be either profit or a draw. So we don't do, as I said, stop loss, and meaning that when you do stop loss, you actually buy your time with money. But when we say it's a win or draw, it means that we buy our money with time. So we are okay to wait a little bit, to play a little bit, to buy more the lower levels, but we want to exit after some time with profit, so we don't want to spend money. And this is the way of trading usually for people who do it as either a secondary source of income or really trade with huge money. So very, very professional, big fishes. And since the first category usually are people, those who look for, who seek for advice in YouTube, that's why we provide this strategy of trading in our YouTube videos. So this is it for Uber. If you like this, follow it. Also, if you like this way of trading, don't forget to subscribe to our channel, press the bell button. This way you will not miss our new videos and new interesting discussions for US-based stocks.